Hello, Hexense viewers. Very good morning to all of you. It's been a while since we met, and I hope you, your family members, all your friends, your colleagues are all doing good, healthy, and safe during this Corona situation. Please take care of yourselves. Wear masks. Since I'm in my home, sitting in my room, so I'm not wearing any masks. So please wear masks and gloves. Please have a sanitized environment. It's been a while since we came up with a couple of videos or recordings of our educational videos on stock markets, capital markets, and everything. So we are going to restart this from today onwards. So you will see more educational videos coming up from us. So for that, to give more advice, more learnings, we have our mentor, Dr.G.Y. Vishwanath, P.hD in finance. Welcome you, sir. Very good morning again.
Hi, Sudarshan. Very good morning. Thank you.
Okay, so let us directly jump into today's session. It will be more of a question and answers which we came up. Basically, these are the questions which we got from our few videos which we posted in our Hexense channel in YouTube and also via Facebook. So those questions will be asked by me to sir. So he will be able to give us a better, clear, layman's explanation on all these questions. So to start with, sir, the very first are lot of questions which we got on our few videos was that why should I invest in stock market? Why stock market? Why shouldn't I invest in other means of investment options like real estate or bank deposit or national savings certificate, etc.? But why should I invest in stock market? What is the specific advantage with stock market using?
Yeah, that's a very basic and first question everybody is asking. And even those who are educated in finance, many of them, they are not aware of the real facts behind why we should invest in the stock markets. Let me come with one by one. That is, first one is everybody wants to have a safe investment and also reasonable returns. So when you say safe investment, we naturally going for our nationalized banks, and as you said, we were going for national savings certificates and other things. The kind of return what we get is around 7 to 8% if you go in for fixed deposit, and in savings bank, you know, it is very low. So what happens is you invest here, and when you compare with inflation, okay, when you benchmark against inflation, the actual return what we get is very meager. Sometimes it can be negative also. Okay, now inflation is reasonably under control, but we know in India we are used to have high inflation. Hence, we need to have an investment which will protect you against inflation. Okay, that is, we need to hedge our investments for inflation. That is one thing. Okay. And the other thing is, like you said, real estate. Real estate you said, and also gold and other forms of investment. When you take real estate, it has been giving a good return since long time. Okay, I mean, at least for the past 15, 20 years. But the problem is the kind of investment involved. Small investor cannot invest in real estate, and also the kind of formalities and the transaction costs by way of government fees and all, it is prohibitive. And that is a problem with that. And gold, it has proved to be a really good investment as our grandpa's wisdom. They have proved again and again that gold investment is safe, and also it is giving reasonable returns over the long term. Okay. Now, when we come to stock market, it has a natural or inbuilt mechanism to provide you against inflation, protect you against inflation. Okay. You can ask me how it happens. I will explain you later, maybe in the future videos.
Okay.
Now, for the basic information, see, when you are investing in stock, you are investing in the business. Okay. So when the economy grows or when the business grows, the 1 rupee what you have invested or the 10 rupee as a share what you have invested, that would naturally the value would increase by way of book value, their assets, their earnings, everything. So if the inflation is going to be 10% in the future, your company, provided it is a good company which is earning reasonably well, it will give you a return against the returns,
Okay.
inflation. So naturally, you will be put against inflation. We can discuss about that later. It is a very broad subject.
Okay, sounds good. Sounds good.
And so I would suggest you should put some money at least in the stock market.
Okay.
Yes,
So we will in general in investment there is a statement where an advice where they would say don't put all eggs in the same basket. So likewise you are suggesting to have a specific set of eggs or investment in a different basket called a stock market. Is that the right way of taking it up?
Yeah, see, it is what we call as diversification in finance. In layman terms, they call that don't put all your eggs in one basket. One is in personal finance, we talk about spreading our investments. Okay, stocks some percentage and insurance, like fixed deposits, debt instrument, so many things. It's better to spread, but we should also see that we get reasonable return because by way of over diversification, sometimes we may lose on our returns. So we should be very careful. I think you should use a good financial planner advisor to do that. Okay, many of us laymen will be lacking in the knowledge, but as you said, everyone should diversify. There is no other option. That is the only way to protect. Yeah.
Got it. Thank you, sir. Thank you so much for that. So I hope people would have got some good idea about why stock markets. So when we speak about stock markets or investing in stock markets, the next question which I got or the very next question where so many people asked us where which is best, intraday or delivery?
Yeah, see that, this question, there is, no question I would say. Delivery is the best thing. Okay. Intraday is for intraday. Generally, what people who are doing intraday are speculators or gamblers. Many of them are gamblers. So intraday is not good for regular normal investor, particularly novice investors. They should not do intraday trading, though it is tempting to do because you see so much of volatility in the market. You feel that you can catch the movement on a single day and you can become rich on a single day. But intraday is a very, very dangerous thing, and it is better though investors who are interested in that get trained, okay, or at least they should do paper trading before they venture into intraday trading. But by saying this, I do not mean that you cannot make money in intraday trading. You can make money in intraday trading, provided you have the right set of skills. Okay, and as a new person, it is a very dangerous game. It is playing with fire. And investment is always good. As we know, great investors like Warren Buffett and others, they have made their money by investing only, investing and waiting patiently. That is a lot of examples in Indian stock market and the world stock markets where they have made huge money. There is no question of that. In the same manner, you cannot just brush away the intraday trading, because intraday trading also gives immense scope to make money. A person who is interested should get trained himself. He should be having some knowledge of technical analysis, not only fundamental analysis, and also the human emotions involved in the stock market. So if you know all this, there is a 10% probability you would make a profit in the long run. Hence, my advice would be investors should go in for investment. Do not speculate, but try to learn intraday trading and strategies that will help you in your investment also, because you will know, I will understand why the stock markets fluctuate, collapse, why sudden spurt, all these things you need to know. Otherwise, as an investor also, sometimes there are situations in which you will find yourself indecisive whether to sell or hold, or because sudden panic you would have seen during COVID 2 months back, shares crash. Even as an investor, many people have sold and they were run away. And they've lost a huge amount of money because they will sell, and after a week or 10 days, the price would have gone up. Okay. So we should know the intraday trading, the strategies, and what is happening in market. And as an initial investor, please stick on to investments that would be good for you.
Okay, sounds good, sir. So, just to make it in a nutshell, delivery is the best. However, intraday, the initial investor should learn the trade, learn the technical analysis completely, and then step into it because it has a lot of risk factors associated.
Yes, true.
Yeah.
And to be a real professional investor, you should know intraday trading also. That's what I mean to say.
Okay, great, sir. So with this, there are a couple of more questions we have, maybe one or two. So in general, how is the markets right now?
Markets, I would say they have come out of the COVID panic.
Okay.
During the initial days of COVID, there was a crash, and most of the markets have recovered. And we hope the economy would be on track in future. I mean, at least after some time. So I think the markets are going to be bullish. When I say bullish, it's not very bullish. There's no need to panic in the market because market is reasonably priced. The valuations are reasonable. So you will have a lot of value stocks to buy. And
okay.
So markets are good. There is nothing to be worried about.
Okay, sir. So overall, the markets are good and they are out of this COVID panic. Sir, there is one more question from a couple of guys. So, what would you suggest on options trading? Do you suggest option trading is the best?
Yeah, when you ask options, I should tell you what are derivatives. Okay, options are part of derivatives market. When you say derivatives is a security, a financial security, which derives, you can call it as artificial security, okay, which derives its value from some other underlying asset. Okay, it can be a share, commodity, or other things. So normally what we have, I mean, the basic unit of the derivative instrument is called as future. You have futures on stocks and the index, and so many other things, interest rates and other things. But for our understanding, we have Nifty futures, Bank Nifty futures. Okay, so futures trading, it gives you leverage in the sense that when you want to buy a share, you have to pay upfront full amount. For example, if you are buying 100 shares of Reliance, which is around 1,500 or 1,400, you have to pay for 100 shares, it is 1.5 lakhs you have to pay. But when you trade in futures, normally you will be paying only the margin. Okay, so we can have a discussion on that. But the problem or advantage is the amount of investment what you require is less. Similarly, the kind of exposure you have and the risk. And on a single day, you can lose all your the margin money, or you can earn 100% of your margin money also. That is the case of futures. Options, as I told you, we have futures on index and also on stocks. For example, the Nifty we have futures, or Bank Nifty we have futures. Similarly, for Reliance or Tata Steel, these kind of shares we have futures. And all these stocks or indices, they have options also. Okay. So again, in options, we have call option, put option that we can discuss later. But options are, call options are comparatively safer. But again, it is also risky. The nuances are to be discussed. Okay.
Okay.
So initial investors, as I already told you, do not venture into option market. Let them learn. Okay, we are there to teach them. Let them learn.
Sure, sir. Great. Thank you. And how do you see gold, with gold being a major investment, especially from Indians?
Yeah, see, we have so much of gold in our land that if we can harness all our gold, I think we are one of the, if we value our gold, we are one of the richest countries in the world. And even a normal middle class family is having at least 10 to 20 sovereigns of gold, which translates into a huge amount of money. And as I already discussed, we are discussing, like our grandmas and our forefathers, they were intelligent enough to, they have been always investing in gold to protecting their property, wealth, or security. And they have again proved they are right. The gold market has gone up so much. Okay, in dollar terms, the gold price has touched 2,000 and it is hovering around 1950, 1950 or something. And I have been advocating, like for the past 10 years, I have been advising everyone to invest in gold. And some people are asking, how can it go? Already it has gone up so much. But I have been very bullish on gold since long time. And now I feel gold is, it is kind of consolidating. There is no sign of weakness as yet. And the 2,000 rupees is acting as a barrier, kind of resistance. If it crosses, we don't know where the uptrend will take it to. And definitely, over in the next 5 years, I see at least 50% price move on the upside for gold. Not only gold or silver, because both are looking very bullish, as the world has seen the worst of COVID, and they learned and they believe that gold and silver will give them the protection against any calamity which is going to happen in the future. So I am bullish on gold, and I do not rule out any short-term falls. Okay, but in the long term, the secular trend is very, very, very bullish up.
Sir, you said that 2,000, is that dollars or rupees, sir?
It is in dollars, okay, because I follow the generally Indian our gold price is based on the international market. Okay, our price is based on international markets. So whatever the I think the gram is around 5,000 or something.
Yes.
The price movement occurs because of the gold price. International gold price, which is in dollars.
Dollars. Okay. So, so in international gold price, it is trending around 1,900 to
1,950, 955 or something.
Oh. So Indian,
and it is
Indian
likely
price,
to go up.
Okay. And Indian price is about 5,400 approximately.
Yeah. I do not follow Indian price that much, but it is directly based on the international markets.
And also international markets, they weigh in a different, this 1,900 is weighed in a different measure.
Yeah, that is
one ounce of gold.
Yeah, 1 ounce. It's around 24 grams or something.
Okay.
Something like that. Yeah.
Okay, that's fine, sir. Because in India, we mostly go with sovereign and also grams. So 8 grams, there is 1 sovereign. And for now, in the recent price for in India, especially in Chennai, is 1 gram of gold is 5,400 rupees approximately.
Yeah, it's almost 40,000 per
43,000
sovereign. Nearly 43,000 per sovereign. We don't know where it will go, and it depends on dollar rupee movement also. If the dollar strengthens, and again the gold price will go up, there's again a very long discussion. Yeah.
Sure. Super, sir. And these are all the top 5 questions we had from our videos. Sorry for the delay in coming up with answers for all these questions, dear viewers and our followers. Keep watching our channel. We are coming up with a couple of new things next in line. Good learning opportunities for you. You can trade along with us, or you can ask any questions you have. Put it on the comments. Sir, thank you so much for your time. I know you are you have a busy schedule. Just so you know, followers, Dr. Vishwanath has about 18 plus years of experience overall, where he's basically a chemical engineer, has a management degree, he's an MBA holder in finance, and he also holds a PhD in finance, specifically on capital markets. Um, he's a chemical engineer turned educator turned a trader. So that is his background. Um, he has both educational experience as well as market experience for the whole of 18 years together. Just to give you guys a background of what rich experience he comes up with, and that is where he's mentoring us right now. So on a different note, there are new videos which are coming up, educational videos from Hexense, on how to see the stock markets trending, how to gauge the stock markets. You also see what are all the different trading patterns to be followed and how to leverage good profits out of it. So please keep watching us, following us, and stay tuned. Thank you so much, team, and thank you so much, followers. You have a great day ahead. Happy trading. Bye.
Thank you. Thank you, Suresh.
Thanks. Bye, everyone.